Hi everyone and welcome to today's More Report on Wednesday the 8th of June with me, Richard Perry, market analyst at Handtech Markets. The European trading sessions got off to a sort of mixed start really, mixed in terms of sort of risk appetite really, mildly lower on equity markets, nothing too significant, but the dollar has started to weaken again, and that's sort of coming as a sort of the markets are settling into sort of more I think a negative dollar mindset, and treasury yields, for example, staying around those lows, 10-year on back towards 1.70, and also the 2-year sort of drifting back lower again, sort of back to levels seen at the height of the non-farm payrolls move. And that is certainly impacting on the dollar, which is just drifting lower again. You had that Yellen speech, which mildly introduced a bit of consolidation, but sort of beginning to drift off again. And we've had overnight Japanese GDP, which was revised slightly higher for the first quarter to plus 0.5%. And the Chinese trade data, which, interestingly enough, the imports came in ahead of expectations, but there was no real economic impact. Sorry, there was no real impact on the. Actually, this data is wrong. This Reuters data, that should be minus 5.6. There's no real reaction in terms of risk appetite from this Chinese data. So what we have seen today is just equity markets just mildly lower, nothing too significant. But as I said, forex markets showing a bit more of a dollar correction. We've got quite a lot of data out today. With starting off at 9:30 with the UK industrial production, it's expected to come in at a negative 0.4% on the year. So continuing this negative move on industrial production. Is this a sign of the Brexit uncertainty and companies putting off investment decisions? Perhaps it is, but certainly the industrial production at the lowest since 2013 is not positive for the UK economy. And then into the afternoon, you've got the US JOLTS at 3 o'clock, and the JOLTS jobs openings at 5.67 is the expectation there. So slightly down, but nothing too significant from the last month. You've got the EIA oil inventories report. Now this is an interesting one because you've got the oil price that continues to push higher. And throughout the last 4 weeks, we've had an inventories drawdown, and it's expected to come in again at -3. So another inventory drawdown. That would be 3 in a row, and 4 out of the last 5 weeks, and that would again be supportive of the oil price. And later on this evening, at 10 o'clock this evening, we've got the RBNZ, the Reserve Bank of New Zealand, with its monetary policy decision. No expectation of a rate cut. However, the consensus has been sort of flying around. It seems to be right on the limit as to whether they're expecting a cut or not of 25 basis points. Arguments over sort of the inflation, which is remains quite low. However, you've got the strength of the Kiwi and also the sort of intriguing aspect of the strength of the housing market, sort of meaning that the market doesn't really know yet whether it's going to sort of go for a rate cut or not, but it could be a bit of an interesting one. Expect volatility tonight on the Kiwi on the back of that decision, certainly if it has a surprise rate cut. And that takes me to my chart today, which is the Aussie dollar. Now the Reserve Bank of Australia kept rates steady and in its monetary policy decision yesterday, and that accelerated this rally that we had in the Aussie. And look at the 73.85 level, which is a big pivot level. Old resistance there became supportive in the last few months to a certain extent, and then became resistance, and breaking above that I think is a key level, a key move to the upside. So that I think that 73.85 level becomes supportive now for a correction. You've got the momentum indicators which are sort of turning around, improving. You've got the MACD lines having given the crossover buy signal, and the RSI above 50 as well. So I think the outlook is more positive, and stochastics are just slightly consolidating as this sort of candle today has just shown a slight correction. But look at the similar sort of move that we saw on on Monday, and it could well be that little corrections are seen as a chance to buy on the Aussie now. You've got these sort of minor sort of consolidation here, and as I said, any sort of move back towards the sort of old breakout level around the 73.85 to 74 figure, I think is likely to be a little buying opportunity now, because there's some decent support around that level, and I think it would sort of help to unwind the RSI. MACD lines and RSI stochastics are all positive, you configured, and suggesting that little corrections are a chance to buy. And I think that's what we're going to see. Now the outlook would still remain positive, I think, until a move below. I think it's 73.33. Am I right? It's not really showing. 73. Sorry, 73.12. So I think that would be your support coming in there, and if I think the Aussie would remain positive in this recovery phase until a move below that, which is also yesterday's low, Monday's low. So I wish you good luck in your trading on the Aussie today. It certainly looks like it's moving high. You've got the overhead resistance that comes in around about sort of that 74.80 area, 74.90, and then up towards 75.45. So a few levels to work with there, and I wish you good luck in trading on the Aussie, and I'll speak to you later. Thank you.